Hello, and welcome to the Immigrant Real Estate Podcast with myself, Dr. Cristina Corban. And today we're going to talk about building the credit. So we've been talking about creative real estate where you could control a property without actually buying it with lease option, or there are a couple of different ways of doing this. You would want eventually to be able to buy that house. So you need to have a plan, right? Maybe you're not buying it from the get-go and you're in the house, but you would like in a couple of years to be able to actually get a loan and buy a house or many houses, right? So how do you build this credit score? There are a couple of very important aspects to building the credit score. And one of them is actually how old is your history. So it's really important that you start this as soon as possible, as soon as you get here, right? So you get to have that history of payments, history of having a credit. To me, pretty soon after I started building my credit and I got a couple of credit cards, I tried to buy a car exactly in the idea of diversifying the credit I was using. So credit can be, the credit that you're using can be not only the credit cards, but it has to be diverse. You have to have some credit cards, you have to have a car loan or a mortgage. So the longer and the more diverse your credit is, the better it is. And the less inquiries, guys. So for me in the beginning, I was just trying to apply without knowing much about it, to apply. And I had a job at that time, and I got rejected, and I couldn't understand what's going on until I started studying about it. So, and when you get rejected, that inquiry and rejection actually stays on your credit score for at least 2 years. So be mindful and only apply when you know you have great chances of actually receiving that loan or credit card or whatever. So I'm going to try to be pretty quick with this. It's not very complicated. Don't make it very complicated. Okay, so the best way, the fastest way to actually start building your credit score is by getting a secured credit card. What is this? You can go to any bank, and some banks are better than others, and I'm not going to get into what bank should you choose. Do your homework and find out what bank you'd like to open. But actually it's not very important. And the more you're getting into, the more you get into actually doing things, that's the way you learn. You know, oh, I like this about this bank, I don't like that about, I'm looking for another one that does that and doesn't do the other one. And this could be actually pretty personal. So, but most banks actually do give you a secured credit card. What does that mean? That means you come with $500, let's say, and you secure your credit card with the cash. Basically, the bank doesn't risk anything. If you don't pay your credit card, they have your 500 and you're good. But that's not what you'd like to do, right? To just run with the $500. No. You want to build that credit. Also, once you open a secure credit card, use it. And don't use more than 10% of that credit that you have. And pretty soon after you have a a secure credit card for a couple of months, and especially if you have a job, which probably if you're here, probably also have a good job, you would start applying for unsecured credits, but you need to leave a couple of months before you do that. Have at least 3 months of having a job, or 4 or 5 months, okay, and having the secured credit card before you start applying for other credit cards. And then use them, and use them responsibly. This is what the whole credit thing is all about, is about your ability, proving that you are able to utilize credit responsibly. And this is a great thing. Okay, so you need to take care of a couple of things. Don't close your oldest account, because that counts toward how long your credit history is. Also, when you open a new account, basically the history is like an average. If you had an account for 1 year and you just opened one, your history would be like 6 months. Be aware of that. So I would say, like, start with the secured credit card. In a couple of months, 3-4 months, apply for another good card, maybe a card with airlines, since you're probably flying home or something, or a card with cash back or points or something, if you're like in Costco or I don't know, something else that would give you a percentage back. That's a good idea with in your financial kitchen there. And apply for another card and utilize not more than 10%. Or if you utilize more, make sure you actually pay before the end of the closing date, because after the closing date is reported to the credit bureaus, and if you pay, let's say you used 50%, but you paid 40% before the closing of the month, then it's reported the 10% that's left there. So credit history, and now you will want to diversify the types of credit. And eventually, when you look at getting a mortgage, buying a house in a couple of years, let's say in 2 years, and I would like at some point, probably I'll have a show exactly about planning, strategizing a little bit, how to get with where you would really like to go with your real estate investment, you know, whether it is your home, you'd like to have a home, or actually make an income out of your real estate investing. So you build your credit, and you would also like to save, to have money for a down payment, right? And I don't know, maybe $1,000 a month, maybe more. In a couple of years, you'll have, depending on where you live and what the value of a house is there, you will get to have a certain amount in your savings. But anyway, let's continue with building this credit toward that. Not getting into strategy in this episode, we'll get into it later date. And how do you diversify your credit? So you started, you have the secure credit card. A couple of months later, you have another credit card, and let it pass a couple of months, buy a car. You have a couple of $1,000 by now from your job or whatever, saving every month. Don't look into saving everything, because you need to have it easy. If it's too hard, you'll give up. So just make sure it's easy for you. What's the amount that you reasonably can put right off the bat towards your saving account, right? Anyway, let's continue with the credit. buy a car. What's going on with the car? I've seen many people. I'm here in Beaverton, and it's Hillsborough right there with Intel employees. And many of them live very close to the campus, and they just either walk or take a Uber or Lyft or things like this to avoid buying a car. A car comes with a lot of expenses, from insurance to maintenance, gas, and so on and so forth. But on the other hand, it also helps you get established and at ease with actually functioning in your new country, you know, and it also helps build your credit. And look at the, you can go to a dealership and look for a car that doesn't cost very much, like not a fancy $15,000-$20,000 car, but one that's like $5,000 or less, or $6,000, let's say. I did that myself. What's happening there is your credit doesn't have history, and the banks will reject your loan application based on the fact that you don't have history. But if you can put 50% down for that car, then it's far easier for a bank to actually loan you the money for the car. And you probably end up with a loan of $2,500, which is not a big deal. You could probably be able to just pay it off your pocket, out of the pocket. But that's not the purpose. The purpose is to actually build your credit and diversify your credit toward later on getting a mortgage. So then it's easy. A $2,500 loan, when you put down just as much, is easier. You already have the secured credit card. You already have a couple of months of credit history, and find that person, find that broker, find that car dealership that would help you in it. So to me, when I first bought my car here, it was an actually $4,444 car, and actually was in pretty good condition. I sold it for the same amount like 4 years later. Was a great deal, and I got into a car dealership that had the car, and I found there someone who I did not give up on actually buying the car, and they didn't give up on trying, and I think they applied for like 20 banks or something until someone said, okay, we're doing this. So we did this. It's possible, and that would help much faster build your credit. Make sure you pay everything on time. Make your automatic payments, and utilize your credit cards. Eventually have like 2 or 3. You know, you can have your secure credit card that you're not gonna close it, even if you have unsecured credit cards with higher credit limits. Keep that secure credit card because it's your oldest, okay? And then pretty quickly move into this building the credit in the first 6 months, if possible, and then allow yourself a time without applying for any credit so that your credit history doesn't get diluted. Remember, I was saying you have a 1-year-old credit history, and you open up a new account now, you'll have 6 months. So do all these things that I just said right now in the first 6 months of your arriving here, or when you start building your credit, and then give it a break. Don't apply for more credits, for more credit cards and stuff. Just maintain these. Pay down your car, pay down and for the car, for instance, make a long, even though you could pay more, make it long, make it like 5 years long. And the reason I'm saying that is so that the account doesn't close before you actually get to apply for a mortgage, all right? You know, because if you pay off your car and all of a sudden one of the accounts closes, that's not in your best interest. Even if your car payment is very low, like $50, that's not what matters. Don't try. We have, I don't know if you have, but I had this idea, you know, like not have credit, pay down stuff and whatever. No, that's not the focus right now. The focus right now is building your credit, maintaining your history, extending your history of the credit, so that when the time comes, you have a longer history. What you can do after you're done with this and you have 3 credit cards and a car loan, what you can do after a while, let's say after a year of opening the first, second credit cards, you can ask to increase your limit, which will help greatly with your credit score, because then you basically have more credit and you're utilizing under 10%. Remember that. You're paying on time. Remember that. All of these are criteria by which your credit score is assessed. And this is how in 2 years or less, you can have a great credit score with a little bit of history and pretty diverse, that would allow you to move toward buying a house, getting a mortgage, right? Meanwhile, you also will have to save. Oh, there's a knock on my door. It was great to have you here at Immigrant Real Estate Podcast. Have a great day. Bye.